How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for January 30th, 2018. Today is February 6th, but this is the data that was reported on Tuesday, January 30th. It was released on Friday, the 2nd of February. And I'm going to go into what we can see with the institution's positions and what they've done over the last week. So here is a snapshot of what the positions were for the institutions. And now let's go into gold and analyze it a little bit deeper. Okay, so gold, what do we see? We see that the institutions reduced their long exposure from 305,000 to 298,000, and that comes with this candle right here at the peak. Now, we've been expecting some profit taking, right? Because the US dollar was hitting some weekly demand, the euro and the pound were hitting monthly supply. So we were expecting things to shift, and along with this shift we were also expecting gold to see a move as well. Now, I do believe that we're going to see more lows on the US dollar eventually, just like I do believe gold is going to go higher. But this retracement is something that was needed because we were aggressive, longs were aggressive, right? And they can only stay aggressive for so long until they take profits. Now, long exposure is at 77%, which we know to be bullish, but nothing like the 82%, right? So just a few more percentage points until we get extremely extended on the long side. But this is a nice retracement. I'd like to see it come down a little bit further so that I can get on board long gold, preferably down here. This would be ideal down here. Okay, so what do we see? Net positions drop from 214,000 to positive 207,000. So obviously they're still very much long biased, and they're holding a very big basket of long positions here. So I do want to get in long. Just right now we have to wait for this to drop. Then I'll be waiting for momentum to shift on the lower time frame charts. And then once I see momentum shifting and I see that they're starting to accumulate again, that's when I will be getting long gold once again. So let's go take a look at oil. What do we see with oil? So oil increases their longs from 852,000 to 866,000 with this candle right here, this green candle right here. So that green candle dipped into a weekly supply area that had already been tested, but the test was very small, and the move away from it was explosive, meaning that there was still some supply at that area. So market again comes into that weekly area of supply, and now we're seeing that move to the downside. Okay, overly exposed, 87%. Very aggressive long positions, very cooled off short positions. Another increase from positive 716 to positive 734 net positions. So obviously we've been waiting for quite some time for a nice pullback in price, some profit taking on the long positions, and I'll be expecting a move down here or even lower. I mean, this can go all the way down here. But I think here would probably be a good spot to see if momentum's going to shift and watch for a move to the upside. So, but for now, I'm not taking any long positions. I'm waiting for a nice retrace, maybe down to this 20 EMA area, which could be right here. Wait for momentum to shift, and then I'll get in long. All right. US dollar, what do we see with the US dollar? We see that institutions closed off about 3,000 of their long positions as price was driving right down into a weekly demand zone. And this was perfectly timed with the euro hitting the monthly supply, the pound hitting the monthly supply. So we see shorts were closed out from 35,000 to 34. Long exposure still at 45, or drops to 45. Short exposure rallies up 2 points to 55%. So we can see that the coloration of the cells are red. All right, so there is still a short bias, right? Net positions is negative 5,000, 5.7 thousand. So I do think we are going to still see a further decline in the US dollar, but we have to wait for the euro to make its decline, for the pound to make its decline. We need to see some momentum shifting to show us that the institutions are finished taking profits, and now they're starting to pile back onto their positions at a better price, so they can be positioned for that move, for the continuation of their trends. So I think there's a good chance that we see a reversal from here, but then again, it can move up higher if it wants to. But again, I'm going to be waiting for some momentum to shift. Most likely going to be staring at the euro, US dollar, and the pound to see when that momentum shifts, and then I'll be more inclined to get in short. I do want to get in short the US dollar. I just don't know exactly where, so I'm going to wait for the charts to show me where, and then once it shows me, that's when I'm going to get in. Aussie US dollar, so we can see that institutions are still a bit aggressive with their long positions, and they are cooled off or neutral with their short positions. Long exposure drops 2 points from 58% to 56%. Now we can see that they've been neutral, right? The sentiment has been neutral over the last 3 weeks, and which means don't make any moves, even though net positions are in the positive. This sentiment was telling us neutral, sit on your hands, which was a great sign, right? Because we were expecting a move to the downside, which is what we're getting now. Okay, we're getting a big decline. I'd like to see price get down to this area where I have orders to take this long. Okay, but right now we have a slight bias to the upside because net positions are in the positive, but the sentiment here, you know, 56% long exposure with the sentiment being neutral, this is not anything clear. What I'd like to see is price drop all the way down here, or anywhere really, watch for a momentum shift, and then I want to see these numbers increase. All right, and I want the coloration of these cells to turn more like this here. Okay, so US CAD. What do we see with the US CAD? We see longs drop from 46,000 positions to 41,000 positions. Shorts increase from 69,000 positions to 75,000 positions. And that happens as we get this drop in price. Okay? So they increase shorts, which causes price to drop. And at the same time, they're closing longs. All right? Net effect being short exposure jumps up 4% from 60 to 64% in total now, and net positions increase quite substantially from a negative 22,000 to a negative 33,000. So that's pretty decent. So we had somewhat of a neutral bias, but over the last couple of weeks we can see that it's becoming a little bit more of a bearish bias, but I'm still being very careful with this one because I have a strong feeling that we're going to see a move to the upside like this. The reason being is because this one is really holding well structurally. If you take a look at the weekly chart and the monthly chart, it's holding up very well, and we're sitting within a 3-month demand zone that was responsible for something really huge. All right, when a 3-month demand zone is responsible for something really huge, it is usually respected. And so we can see that it's been tested already one time here, a second time, and this third time we're getting a higher low here. Okay, so I'm expecting to see a move here. It's holding very well. As the US dollar was dropping, it was holding very well. We haven't even really hit this weekly area of demand here. But on the daily chart we have a nice setup to go long, which I'll be taking when price does get triggered. But the trade signal's there and I'm going to take it. But again, looking at the data, there's a slight bearish bias. They are aggressively short, and longs are in a neutral territory. So looking at this data, it looks like price wants to go lower, but we were just in neutral territory. This jump up into bearish sentiment was just because of this drop here. So I'm not going to take this as any indication that there's going to be a bigger move to the downside. Like I said, I have a trade signal that's going to tell me, that has already told me where to go long, so I'll be opening up that trade long when it does get triggered. Alright, so let's go to the next one, US dollar Swiss franc. So this one's a good one here. We got an increase in longs from 36,000 to 37,000, an increase in shorts from 14 to 16,000. Net effect is short exposure rallies from 28% to 71%. Longs drop 72 to 69. Net positions drop 2,000 from positive 22,000 to positive 20,000. We are sitting within a tested area of monthly demand. A move up with the US dollar is expected. Could very much be short-lived when if price gets up here for a bigger decline, because we are expecting US dollar to break even lower, but again, we don't want to assume that that's going to happen. We want to wait for the signal to appear on pairs like the pound and the euro, because they have their higher time frame areas in control. So we want to see when the institutions start reversing price action and getting back on board with the bigger time frame trends. So watching this one, there is a slight bullish bias, and again, this one's holding very well structurally based on comparing it to the US dollar. So I think we're going to see some nice upside eventually, but again, we have to time it well with the rest of the markets. Euro US dollar, we have a decrease, profit taking on longs from 262,000 to 258,000. But long exposure increases 1 point. Why? Because they also reduced their shorts from 117 to 109,000. That was as price was moving up right into a weekly area of supply. So some profit taking was happening. And also net positions increased by about 4,000 positions. So we're now sitting within a monthly area of supply, nested at a 3-month descending trend line. Very good spot to see a big pullback. Okay, we have an area here I could pull back to, or an area here. I think the likelihood is we're going to come down, test this trend line, and then right at that area is where I'll be watching for momentum to shift to the upside. If it doesn't happen, then a bigger drop is what I'll be expecting. But right now, they're very well situated to the long side. Look at this, 70%, very green. All right, very green coloration of the cells, so the sentiment is extremely strong, bullish, but again, aggressive these last few weeks. So they're profit taking now. So this is the last place you ever want to go long the euro. We're in supply. They're very aggressively positioned to the long side, so this is not the time to be getting in long. We want to see some more profit taking. We want to see a bigger pullback, and then we want to see an accumulation of longs, and then we get in, if that does happen. Because something really tricky is happening with this chart right now. I don't consider this to be a monthly uptrend. I consider the monthly to be in consolidation. So if that is the case, we have to assume that there could be some accumulation here and a move higher. But if you do consider that to be a monthly trend line, and the monthly trend is up, then weekly is what would be the area to go long at. But again, I'll be waiting for momentum to shift there. All right, so yeah, that's what I'm waiting for. With monthly consolidation, monthly supply, I mean, this can drop down, even test this 20 EMA, or even lower. Anything can really happen, especially with this 3-month trend line here. But then you look at the higher time frame charts, and it looks like this can easily go up here in due time. So, waiting for the drop, waiting for accumulation to happen, momentum shift, and then I'll go long. Pound US dollar, so similar with the euro, we're hitting a monthly area of supply. And so this area, when price hit it, we saw longs being closed out for profit taking, reducing long exposure from 99,000 to 95,000. They also closed out some shorts, leaving long exposure at 60%. So coloration of the cells, very long biased, a slight decrease in net positions, but long exposure is a very aggressive, so we could see some profit taking, which is what we're starting to see. Move to the downside, we have a nice weekly imbalance here where it could be timed well with the euro. Momentum shift to the upside, very possible. Or we can see a bigger drop in price if the euro decides to respect that trend line and that monthly area of supply. So again, you know, monthly charts and consolidation. So with monthly in control here, we could definitely see a bigger drop. Okay, that's not out of the cards. Just because they're very bullish now doesn't mean that they could switch this to bearish. So I'll be waiting to see if that's what's going to happen. In the meantime, there's some short setups I'd like to take advantage of to ride price to the downside. I've already got some short positions open that I was opening as price was rallying up in anticipation for this profit taking and this move to the downside. So those on the euro and the pound are playing out pretty nicely so far. Alright, let's go to the US dollar Japanese yen. What do we see here? An increase in longs from 160 to 162,000 and a sharp increase in shorts. Look at that, 37,000 to 47,000 positions. That comes as price drop. So there's your reason for the shorts. It was to get price to drop into this area to react to the upside. Long exposure drops, so we've been expecting this, right? We've been expecting for the exposure to drop because they were so overly exposed to one side that, you know, they can't keep holding that overexposure for too long. So eventually you have to see a decline, which is now what we're seeing. They're increasing shorts. So, like I said, structurally this is holding very well up against the US dollar, just like the US CAD and the US Swiss franc. So I do believe that when the dollar does find a bottom and find some support, and we see the institutions coming in to buy back up, I believe this one's going to rally higher. I've always been waiting for price to get down here. This is ideally where I'd like to see price come down to. So is there a possibility of that happening? Absolutely. And I will definitely take advantage of this move to the downside when the positions are available. So far there has been a couple trade signals that I've taken advantage of, and they were mentioned in my journal that I posted on Twitter. And if you don't know what my Twitter page is, it's at MAGIKEV, MagicKev. That's my Twitter handle, and you can follow me there. I post all my journal entries and market analysis on there. So yeah, so I do believe we're going to see a bigger drop down here. I think that's in the cards, even though we're bullish bias here, and that's based on the US dollar and what I believe is going to happen with the US dollar. But I'm not going to assume that's going to happen. I'm going to play it safe. I'll have short positions simply because the trade signals are there, but I'll be playing it very safe because I realize that we have some resistance here, or some support, I should say. Alright, so let's go on to the Kiwi. So we see longs increase from 24,000 to 29,000. Shorts remain roughly the same. So therefore, long exposure jumps up from 49 to 53%. Still neutral, meaning don't do anything, even though net positions are positive 3.4 thousand. We're reacting from some weekly supply. So, but frankly, this is holding up very well. Okay, we're seeing a nice pullback on the Aussie, the Euro, on the Pound, but this one's holding its shape. All right, it's not really retracing back like all the other pairs, and they're neutral. Okay, so there's no profit taking going on here because they haven't been heavily biased to any one side. So there's no real move to the downside. So what does that tell us? That means when the Euro finishes taking profits and a foundation begins to be formed and momentum starts to shift and we start to see the institutions getting on to ride the trend again, we can see this one make an explosive move to the upside from here. But I'll be waiting for those signs. Okay, that's just what I'm thinking may happen based on all the data from the markets. Okay, so already this week we had, let me take a look. On Monday we had Aussie rate being released, no change. Tomorrow we have the Kiwi, and then on Thursday we have the Bank of England releasing rates. Yeah, so for the pound, so expect the pound to drop a little bit further from that. And that's pretty much it. Hope this was useful, and yeah, have yourself a good trading week. We'll see you next week.